Hi, Steve Chater here with TCT Property Management. And we're way more than property management. We're actually the resource for people building financial security, financial independence, building wealth with real estate. And I just want to share with you, a short video right now on Wealth Building Basics 101. And I want to compare real estate to stock market investing and just make some observations for you. Number one, let's just dispel some myths. And a myth is something that we are told. A myth is something that we may believe to be true, but it may not be true. And so number one, real estate takes too much work. That's the first myth. Number two, second myth is stocks give a consistent return over time. And number three is a well-managed stock portfolio performs better than real estate. Three myths that I want to dispel at this point. Okay. Now, when we look at the return on investment or how hard our money works, what I did was I went back and I said, let's just take a look at the stock market. Let's look at the Dow Jones Industrial Average historically since the year 2000. And you can see here we've got some red cells. That's where was negative growth. We've had some positive growth, some phenomenal positive growth all the way through 2021. Interestingly, the average return on investment for a dollar that you put into the stock market in the year 2000, 20 years later, would have made an average of 6.5% return on investment over that period of time, every year, 6.5% every year, okay? Not bad, way better than putting it in the bank. The bank's going to give you 0.5% interest. So this is what's happened with the stock market. Goes up, goes down, averages 6.5%. So let's say you started with $50,000 and you put $50,000 in the year 2000, and your money just follows. You don't add any more money to it. It just follows the Dow Jones Industrial Average. Well, the first year, it went down a little bit. It went down to 47, but don't worry about it. It's going to go back up because we went down to 43 and then 36, and then it's back up to 45. But, oh, wait a minute. I had 50. And even though the market went up 25%, I'm still behind. All right. They tell you, just keep your money in a well-managed portfolio will outperform the stock with real estate. Keep your money in over time. So, yep, my $50,000, if I go all the way down here to 2021, my $50,000 has grown to $158, call it $160,000. That's awesome. It has grown over that period of time. The stock market does well with that. Okay, so let's look at, so that's the past performance of the stock market. Let's look at real estate over that same period of time. And this is Phoenix real estate, and this is the average price per square foot on a piece of property. And so in the year 2000, we were about $96 a foot. Right now, we're actually over $267 a foot. But November of last year, that's where we were. And that is a 5% appreciation rate over that period of time. Now remember, we said the stock market's going up 6.5% over that. But here's the thing, with the real estate, you don't have to put all the money down. You don't have to put $1 in to buy $1 worth of real estate. You can make a down payment and then have your tenant pay for the mortgage for you. So let's just say that you took your $50,000 and in 2000 you bought a house for $200,000. What would have happened to the house over that period of time? So we're going to say real estate went up 4.5%. We're going to be conservative. It actually went up 5%, but we'll say conservatively it went up 4.5% over that period of time. So in year number one, instead of going down, your value of your property went up. You're $209,000. Year number two, you can see it went up, and it continued to grow over that period of time. At the same time, the tenant's paying your loan down for you. Now, I'm assuming that the tenant is paying off about $300 a month. Today, it's about $400 a month. But we're being conservative here. So look at what happens. 20 years later, the value of my property is $482,000. The tenant has put $73,000 worth of equity in my pocket by paying down my loan for me. And so my equity buildup, now I'm at $405,000. in equity buildup. The difference between what was in the stock market and the equity buildup on my real estate is $229,000. Remember how much it was in the stock market? $158,000. And the real estate's at $405,000. So the stock market did very, very well. You're netting $126,000 after you paid down, right? And then real estate, take your 482 minus the 127 that I still own, and minus my down payment, I'm netting $355,000 instead of $126,000. Return on investment calculator. Let's just look. I put in 500. I get 405 returned over a 20-year period of time. What is that? That's 11% return on investment over that period of time. Every year. What was the stock market? 6.5. What was the real estate? 11. And I'm just talking about buying one average piece of real estate. The return on investment for you is more than double. Hey, we wrote the book. It's called Hold. And we wrote the book on the safe, secure strategy to build financial independence, financial security, to build wealth with real estate. And so the myth, real estate is too much work. If you manage the property yourself, it absolutely is. That's why we're here with TCT. It's not if you let somebody else, and it's just like letting somebody else manage your stock portfolio. You would expect that if somebody is managing your portfolio, it would do better than average and increase your net return. So, thanks for watching. Told you it was going to be quick. Just making two comparisons. Start with 50. How much do you end up with? It's stocks or real estate? Wealth Building 101. Hey, at TCT, we're here for you. We're way more than just property management. We're education, information, and of course, we do property management as well. Thanks for watching. If you like this video, click below.